right, we will get started with the show. Thank you again, everybody, for joining us this morning for our Chamber Connect. I'd like to thank Central Maine Power for being our sponsor for this series. Today we will have the Q&A feature is enabled, so please submit any questions that you have and we will get to them in the end. We will have a Q&A time. This presentation will be recorded and we will also be able to send you the slide deck. So don't try to get everything down on one slide as soon as you see it. We will email it over to you so you can pay attention a little bit through the presentation. Today we are covering how to navigate the PPP process for full forgiveness. Today we are joined with Amy Bassett from the U.S. Small Business Administration. In her role as District Director, Ms. Bassett is responsible for leading the Maine SBA team and the delivery of the SBA's financial assistance, entrepreneurial development, and contracting programs throughout the state. Key to the delivery of programs and services is the close collaboration she helps foster with lending partners, SBA resource partners, economic development professionals, and local and state entities. These relationships promote entrepreneurship and small business creation growth. And ever since the pandemic, dealing a lot with PPP. We are also joined today by William Card, who's the economic development specialist from the Maine District Office, who might tag in some pointers here and there throughout the presentation. So with that, I will turn it over to you, Amy, and let me know if you want me to share the screen right off.
Great, Katie. Thank you so much. And thank you for having us here to talk to your members today. So yeah, let's get started with the screenshot. And we'll go to the opening slide. So as Katie mentioned, SBA has definitely not been a secret since, and we've been visible since all of this pandemic and the crisis started. We have historically been throughout Maine with our programs and services, but with the federal response to the pandemic, SBA had some fairly significant increases in funding opportunities, as well as new programs that have been stood up. And we're certainly going to cover all the details that everybody is very interested in as far as the forgiveness of the Paycheck Protection Program loans. But I kind of wanted to give you a little overview of sort of where we're at this point, what's still available, and how far we've come with some of these programs. So for the PPP, that program actually was stood up from the ground up on April 3rd. And currently speaking, it is not available for additional applications. The program did close as of August 8th. So as of that point in time in Maine, we had lenders working in collaboration with SBA to approve 28,309 PPP loans for almost $134 billion. So a significant amount of money. And the other fact that I want to make sure we highlight is that the average loan size we're talking about here is $80,000. So really we're glad to see that in Maine, these loans were targeted to help, the smaller businesses as well. It wasn't just bigger businesses getting big loans in Maine. As far as what the EIDL loan advance is, that was commonly referred to as a grant or up to $10,000 grant. It was basically determined upon the number of employees that the business had, $1,000 per employee. And that application for that process worked simultaneously with the EIDL loan. So two distinctly different programs, but the one application kind of pathway. Currently speaking, the EIDL advance funds have been exhausted. They were exhausted back on July 12th. And again, significantly used here in Maine. There were 17,084 EIDL advances approved for about $53 million. This will come back up when we talk about the forgiveness calculation. So I just want to set that context as far as when we talk about the EIDL advance, that's what that is. Switching over to the EIDL loan, this is a long-term tool of the SBA's in response to disaster situations. And these loans became available back on March 17th. And currently, you can still go online through the portal and apply for an economic injury disaster loan if you haven't yet. Many businesses have, many are still waiting. We know that it's been a difficult process. Last I heard, as soon as this declaration went countrywide, the volume just really exploded. And last I heard, there were about 14 million applications that SBA is working through at this point. But in Maine so far, we've had a significant number approved. So as of the end of August, we had 10,236 EIDL loans approved for $580 million. If you're experiencing delays or concerns in the process, our contact information is going to be at the end of the presentation, and feel free to reach out to us and we'll see what we can do to help you navigate those issues there. And then the other item that I wanted to make sure everybody was aware of is the SBA debt relief. This was funding that came to the SBA through the CARES Act. And what that is it actually is making 6 months worth of payments on every existing SBA loan. And when I say existing SBA loan, it's including all our 7A guaranteed loans through banks and credit unions, the 504 loans, and our microloans that have been originated through our microloan intermediaries. So that is a tremendous benefit to any business who currently has an SBA loan, or if you get an SBA loan and it is fully dispersed by September 27th, you can take advantage of these 6 months worth of payment as well. So if you're in the process there, make sure you take advantage of that. And the link at the bottom of the screen will give you it will connect you to all the details on these programs. And we'll move on to the next slide. So getting into the heart of the subject here today, we always like to we can get into a lot of details, but we want to make sure that we start and remember the focus of the Paycheck Protection Program. And what it was always designed for is to keep businesses open and to keep workers paid. It was created again by the CARES Act, which was signed back on March 27th. And it really, a lot of things changed between when this was created and now. And so the rules and the guidelines and the forms and everything has sort of kind of rolled out on an ongoing basis. But when you think about what SBA and Treasury was tasked with, again, it was created on March 27th and it was open on April 3rd. And this is, over $650 billion that SBA and Treasury was looking to get out. So it was a little tough to get all the details put together in a week. So that's why it's been challenging, but I think people understood that it was also able to be flexible the way it was kind of rolled out. Ultimately, these loans, it was intended that they be able to be used so that they could be forgiven. We know that incurring debt is not something that's probably going to be helpful to most businesses at this point in time. And one of the a couple of the key features that were changed over time is this first item on the right-hand side, where only up to 60% of the loan proceeds must be used for payroll in order for it to be still fully forgiven. That was reduced over time because it was recognized that businesses couldn't necessarily open, couldn't necessarily be paying people, and there were some challenges there. The other big thing is the switch to a 24-week period versus just using the funds over an 8-week period was another significant change there. Again, ultimately, we hope that these loans will be completely forgiven. But if it does turn into a loan, the terms of it are very reasonable. It started out, it was going to be a 2-year maturity. Through the Flexibility Act, that was extended to be up to 5-year maturity. The interest rate is fixed at 1%, and it starts out with an upfront 6 months deferment of payments. But again, we're hoping that everybody can get their PPP loan fully forgiven. Next slide, please. So to really kind of talk about a little bit of the basics and to focus on the forgiveness, we start with thinking about when you're spending this money. So businesses are looking to cover the cost in what we are calling a covered period. And businesses may select, if the loan was approved before June 5th, you would have been given an 8-week covered period. That being said, when the Flexibility Act passed, those businesses now could opt for a 24-week covered period to use those funds. If a loan was approved through the bank on or after June 5th, you would automatically be using that 24-week covered period. So again, that's the context of the expenses you're looking to utilize these funds within that period of time. And the start date of the covered period is the date that that lender dispersed the funds. The eligible expenses are, and again, you're going to want to, this is the Paycheck Protection Program, so the bulk of it was really focused on paying payroll. So you're always going to be looking at trying to pay any kind of payroll expenses, which would include salaries, wages, commissions, or similar compensation. It could be cash tips. It could be, sorry about that, muting a phone. Should have done that before. And it can also be vacation time, leave, family medical leave, health insurance coverage, and the like. It gets a little confusing sometimes for the independent contractors or sole proprietors. So again, that's going to be looked at wages, commissions, or net earnings for that sole proprietor. As far as business rent obligations, these would be for obligations, say a lease on either real property, which would be real estate or a building, or personal property, meaning machinery or equipment, the like of that. So there would have to be a lease obligation, like a lease agreement, in place on or before February 15th in order for that to be an eligible expense. There was some clarification. If your lease expired during the covered period and you renewed it, that's okay. Those expenses still would be permissible to be considered for forgiveness. As far as mortgage interest payments, this would be, again, tied to any real property or personal property, and it's the interest payment associated with that monthly payment. So just the interest portion of that payment is an eligible consideration for forgiveness. And again, that February 15th date is our key there, that those debts would have had to have been in place on or before February 15th. I do want to clarify that it's secured debt. So that would mean debt that is backed with collateral. So if it's credit card debt or some other type of unsecured debt, that would not qualify and that would not be considered in this interest payment eligible forgiveness purpose. Utility payments are also allowable. And when we talk about utilities, we're talking about gas, electric, heat, telephone, internet, those types of things. I know I've been asked the question before about heating oil, and if that heating oil is your utility, because that's your heat, that could be a utility payment. And again, it's for those utilities, the internet, the phone service, those types of things. You couldn't be just starting those up. Those would have been in place that February 15th date as well. We talk about the 60% must go towards payroll costs in order to maximize forgiveness. And some of the other caveats, again, to protect the workers' jobs and payroll, there cannot have been a salary reduction of more than 25% in order to get full forgiveness. And then there has to have been the maintaining of the full-time equivalents. We'll get into all more details on this on the next slide, please. We often get asked about the timeline of how long these things take, and there is a hard stop of when must the borrower submit their request for forgiveness to the lender, and it's actually pretty generous. It's within 10 months of the end of the covered period. So that's pretty far out, and that could be, technically into next calendar year. But what we're seeing is many businesses want to get this determined once they're done. So as soon as they've expended their funds or they reach the end of the covered period, they're starting to begin compiling the information and completing the forms to submit to their lenders. I should say at this point, as I mentioned, this information has sort of rolled and evolved a little bit over time. And we are not, we don't have a crystal ball. There still could be additional changes. We are always watching the news and watching what's going on in Congress, as are all the small business owners and our partners as well. So what we're talking about here is what's effective now. I know there are already lenders submitting forgiveness requests to SBA on behalf of customers, but some lenders and some customers are holding off a little bit to see if rules change. Again, technically speaking, businesses have up to 10 months after the end of the covered period to submit these applications. So what would be submitted to your lender is going to be the completed form, either the full form or the easy form, and we'll talk about these in a little more detail, the forgiveness calculation, and your supporting documents to support the forgiveness request. So once that information is submitted to the lender, they're going to review the information. Lenders aren't in a position to really tell you what to put on the forms or how to fill out the forms. That's really not their role here. We'll talk about some resources available to you for these purposes at the end, but lenders are really just kind of confirming the documents are received, doing some quick checks to make sure that things add up, boxes are completely filled, and the like. Another form that we're hoping to be able to collect is the some of the demographic data. So if you could help us out by completing that form, and lenders will submit that as well. So lenders, once they do the kind of checks and balances here, they then have a specified online portal. All of the lenders throughout the whole country are using this portal where they submit to SBA. Lenders have up to 60 days to do their piece of this. I don't anticipate that it's going to take all that time, but it might as volume increases. Some of our lenders did a tremendous number of these, so we wanted to be flexible. So they have technically up to 60 days to submit these requests. Once these come into the SBA portal, again, technically we have up to 90 days to review these. We don't anticipate it will take that long. Again, volume right now is a little bit lighter because it's just opened. We opened our portal on August 10th for the lenders to submit to us. Last I heard, there were about 10,000 applications for forgiveness in our portal, and they're working their way through those. We're keeping very close tabs to work with the lenders and ensure that it's a smooth process. So far, it seems to be working well. And I think the other thing we want to be sure is that we're taking our time to be sure we go through all of these, because again, ultimately, the intent is to get these loans completely forgiven for the borrowers. But throughout this whole process, I want to remind everybody that there's no payments due from the borrower. And once SBA determines that forgiveness amount, we're going to pay the full principal balance and all the interest on that forgiven portion. Next slide, please. I know, having worked for the government for a very long period of time, we in the government space get very comfortable talking about documentation. But as a small business owner, you have a lot of stuff going on. So we want to kind of give you some guidelines and ideas on what supporting documents you should be accumulating, using, retaining in order to support your request for forgiveness. Again, hopefully most businesses are going to be able to use the EZ form. It's a much more streamlined and a lot easier to complete. There are some significant safe harbors that the form really talks about, and I'll talk about in a little greater detail. But that form is very streamlined and a lot easier to submit. If you have utilized payroll services or things like that, that's going to save you a lot in regards to documentation, because they'll have that for you. And again, think about the documents you use to support your original request. So kind of matching up the documents and having that consistency. The guidance has been to hang on to this documentation for at least 6 years. Some people are saying 10 years, but again, we want to make sure that people are thinking about maintaining this documentation for the long haul here. Again, lenders are relying on your representations, and they're not really in a position to give you advice and guidance. They can help guide you through the process, but not on the exact completion of forms. Think about it, the way I sort of like to equate it is think about completing your taxes. Again, the onus is on that business owner to complete your taxes, and this is how this one has structured as well. Next slide, please. So again, as I mentioned, hopefully most people will be able to use the easy forgiveness forms. So any business that is, it's an individual owner, independent contractor, or sole proprietor with no employees, you can use this form. And it'll be pretty straightforward as far as what you can use. There are specific limitations on the amount of net earnings that you can cover. So this will be a pretty straightforward process for those businesses. Sometimes it seems a little clunky if you have to like physically write yourself a check or have some kind of a documentation trail for what you're paying yourself, but that's really the best guidance that we have at this point as far as documentation for sole proprietors. So the next hurdle, if you're not a sole proprietor and you want to try to use this easy form, it's sort of a two-part test. So if you did not reduce your wages by more than 25% during that covered period or the alternate covered period as compared to the period of time you used when you applied for the loan, that's the first test. If you didn't do that, you can use this form. And then additionally, if you didn't reduce the number of employees or the average hours paid to them, you can still use this form. And we're talking about all employees earning $100,000 and less. Those are the ones that are taken into this calculation. And if you don't reduce your, sorry, let me start that over. So if you did have to reduce your employees because you couldn't rehire them or couldn't hire similarly qualified people, that's not going to impair you on this regard here as well. And then the last option, again, was a two-part test, but it's the same. Don't reduce your wages by more than 25%. But the second part is, and this could be applicable to a lot of businesses in Maine, is if you couldn't reopen or if you couldn't operate at the same level as before the pandemic because of federal regulations, and that would also be carry forward to state regulations that didn't permit businesses to open or didn't permit them to open fully. So if you couldn't open and couldn't operate at that same level, that's another safe harbor, and so you still would be able to utilize this easy form as well. And it's spelled out in much greater detail as a sort of checklist at the front of the form. Next slide, please. So another frequently asked question is, do you have to wait till the end of your full covered period to submit your application for forgiveness? And the answer is no. Technically, once you've expended all of your PPP funds, you could then begin compiling the information and submit your application. You'll just want to be definitely certain that you can meet the criteria of, again, I'm harping on this, not reducing your salaries and wages by more than 25%, and also that you are able to account for not having a decrease in your FTEs. If you can't do that, then you want to wait until you can get in compliance with that to be sure that you are meeting all the requirements for forgiveness. And when you're completing that form, even if you're submitting it prior to the end of the 24 weeks, if that's your covered period, you're still going to be utilizing a covered period of 24 weeks. Next slide, please. I talked a little bit at the beginning about what would be eligible payroll costs. So here's the full list, so it will be visible, and it'll be visible in the slides when we send those out as well. But I want to make sure we highlight that it's also, this is the employer portion of any eligible payroll costs, and this would be the gross cost, because you can actually include the taxes, state and local taxes on the employer portion. These would be the gross wages that would be reported here. When we start talking about sole proprietors, I mentioned it's a little bit different. So there are specific dollar maximums that those folks can submit for and pay themselves. So definitely be sure to check out the FAQs on these eligible payroll costs. They're very helpful and very clearly spell out what is happening there and what you can do and what you can't do. We did see prior to it switching to a 24-week period, many businesses were struggling with that, using these funds within 8 weeks. But we did see some businesses utilizing some form of hazard pay or bonuses to retain or entice workers to keep working. And at times they weren't doing their regular jobs. But those expenditures are still considered eligible payroll costs. That was a big deal, a big concern when the businesses couldn't open and they couldn't fully open, but again, that 24-week period became very crucial. Next slide, please. I talked a lot about the non-payroll costs, but again, here's a very specific list and want to highlight a couple of items here as well. We sort of have been, and from the get-go, advising people to be consistent. So if you have these expenditures on your prior tax return for the prior fiscal year and the existing 2019 that you're preparing or getting ready to prepare, if you had been on extension, be consistent in what you're counting for expenses. Some of the questions that have come up are around, if it's inside or outside the covered period, can we pay those? So really what we like to focus on is start with when these expenses were incurred. So there is flexibility if payroll costs do occur outside of the covered period. There are circumstances where they can still be included. And if they, same with the non-payroll costs. If they were incurred during the covered period, but due to be paid outside the covered period, they still can be included in these eligible non-payroll costs. Another question that has come up a lot is this item of transportation. I think it implied to people, like, if you put gasoline in vehicles or something along those lines, that could be an eligible non-payroll cost, but that's not what this was intended. And again, they came up with a very clear FAQ on this, but it's really the transportation or delivery costs of utilities. So those costs associated with delivering the electricity, the water, the internet, those types of things are what is implied here with the transportation cost. And the other thing that has come up at times is home-based businesses. You have to be very careful. You always have to be careful when you're expensing home business costs. But again, it really has to be tied to business expenses. You have to have a very bright line of not including anything that would be personal expenses in this calculation. Next slide, please. The other key aspect of the Paycheck Protection Program was not only paying the workers, but keeping them employed. So this is where it became a little bit tricky when businesses couldn't reopen. How do you maintain your employees? And then the other kind of nuance that came into play was the increase in the unemployment insurance. So there were added safeguards and added criteria built in to help businesses be able to justify that they maintained their employees or did the best they could to maintain the number of employees. And that doing the best you could is some of the safe harbors that we talk about. So it's very important, if you weren't able to clearly, keep the same number of people you had at the time of when you applied for the loan to when you're submitting for forgiveness, check out the safe harbors. And we're hoping that most businesses will be able to meet those. And again, those are affiliated around you couldn't rehire people, you couldn't bring them back, and just providing that extra documentation. I've got another slide coming up that talks about that documentation. And the other fact that I'm going to kind of highlight on this slide is most businesses, I think at the beginning we didn't necessarily clarify what the definition of FTE or full-time equivalent employee was. So what you want to do is be sure you look at what that employee count number was that you had at the beginning, and that you're comparing that to where you're at the time of forgiveness. But if you have a lot of part-time employees, you have a couple of options there, and you might want to kind of look at both those options if you're, having an issue trying to account for FTEs. So they can either be prorated, So number of hours prorated on based off of a 40-hour week to tally up your total employees, or any part-time employee you could count as a 0.5. So if you have a lot of part-timers, it might be best and simplest actually just to go with that 0.5 calculation. There are some online calculators that are out there, and we have one that I'll share with you at the end, a link to that. So these can be really helpful because you can make some adjustments and not get kind of hung up filling out the form before you've kind of worked through some of these details. Next slide, please. So as far as maintaining the salaries and wages, I've repeatedly said that you could not have reduced them by more than 25%. But we do want to highlight that that is calculated by employee. So it's not an aggregate of your wages. It is a calculation per employee that you have to account for there. The other thing is, if you could not bring someone back that like they refuse to come back and you meet that safe harbor, that's not going to negatively impact you here on maintaining salaries and wages. So for example, if you had somebody working for you and then they wouldn't come back or couldn't come back, and you're not going to get double hit based on that you couldn't bring back that full-time equivalent employee and you didn't pay them anything because they weren't there, if that ended up being the case. So you don't get doubly impacted in that regard. So there's a little bit of there's more than a little bit. There's some complicated formulas around this, but again, we like to think about if you can looking at comparing the covered period outlined here on the slide versus what you did in your prior reference point period, and you're not reducing the salaries by more than 25%, you'll be fine in this safe harbor here. Next slide. I've talked about documentation a few times. One of the key things to document, because I do think many businesses will run into this, is that you weren't able to rehire due to the people couldn't come back, wouldn't come back for whatever reason. So this slide is really clear, and I want to make sure people are very clear on the documentation and the steps that you should have gone through or go through to make sure that you're meeting the safe harbors. So you want to make sure you have all of this in writing. I've had the question about how do I document that I couldn't reopen? Well, certainly the state website, you have alerts from chambers, you have alerts from associations. So through those checklists and through those alerts, you can document whether or not you were able to open, when you were able to open, if you were able to fully open. So certainly that's a key part of the documentation, but also you want to be sure you're documenting if you're offering employment to people and they didn't come back or couldn't come back. These are the pieces of documentation you want to be sure. And then there is the caveat that you do notify the unemployment office within 30 days of that employee having rejected that offer to return to work. Ultimately, it's the State Department of Labor's decision on how they're handling these things, but this was the process that was designed as far as how do you cover yourself and how do you ensure that you're not going to be negatively impacted because you couldn't bring back these folks. Next slide, please. I mentioned about the EIDL Advances at the beginning, and I would say this is an area we hope that there's more to come on, some changes here. But for your purposes, when you're completing your forms and when you're submitting your request for forgiveness, if you were a recipient of an EIDL Advance, again, that's that up to $10,000 forgivable grant. This is not the EIDL loan. The EIDL loan is not factored in here, just the advance. But if you did receive an EIDL Advance, that will need to be denoted on your forgiveness application form that you're going to submit. The SBA has tally of these, but also the lender is going to report this amount to SBA, and we will be subtracting that from the forgiveness amount. Again, this is the rules as they stand at this point in time. If ultimately that EIDL advance must be paid as it's been reduced from your forgiven amount on your PPP loan, it could be paid off in a lump sum, or it could be termed out over the term of the loan. The reason behind this is because these are both federal funded programs, and all of this funding came through the CARES Act. SBA is trying to prevent a duplicate benefit situation here. So we're trying to prevent people from receiving free money for doing the same thing twice. So that's pretty much the background here. Again, if anything changes in this regard, we will definitely communicate it to the lenders and get the word out to all of you as well. Next slide, please. Ultimately, SBA is going to review eligibility when the lender submits the application for forgiveness. I don't anticipate that there were many ineligible PPP loans made in Maine by lenders, but again, SBA is going to make that ultimate determination when the forgiveness application is submitted. And if any expenditures are not deemed to be eligible use of purposes and ultimately can't be forgiven, there is going to be established, they've already set up the framework, an appeal process. So if a borrower wants to appeal, it's the borrower that would be appealing to SBA, not the lender. But you could ultimately appeal SBA's decision if you disagreed with our determination on eligibility or the like. We have all the details. Again, we don't anticipate this happening a lot, but I do want people to know that there will be an appeal process available to them if something happens for some reason. You run into this situation. Next slide, please. In the district office, we're here local in Maine. There's a team of 7 of us, and throughout this process, we've done our best to provide guidance and to lenders, to small business owners, to all our partners, and we've sort of been learning as we go along with you. The first 2 websites are the official places to get official information. A lot of other information is floating around out there. I work for the SBA, my team works for the SBA. We go to these 2 sites to get our official information. All of it's outlined here, and it's a great resource for the public as well. As far as some other tools available to kind of help you with this forgiveness process, the Small Business Development Center has some online tutorials, YouTube video type tutorials, very well done, very helpful, accessed for free. The link is here, so that can be really kind of a good thing to check out to before you start down this process. They walk through the forms step by step, so please feel free to visit those videos if that information might be helpful. And then the last item on this list here, this is an online calculator, and I know there's a lot of them out there. Many accounting firms or CPA associations have developed calculators, and they're being widely used and definitely being used for their clients and customers. But this one was designed by a bank out in Oklahoma with a large entity that designs some online apps and has the expertise in that. But they've done some webinars with SBA at the national level. So this is, again, a free guideline calculator that you could use that might help you kind of do some checks and balances, figure out how to complete the forms. So definitely feel free to check that one out. Our official resource partners, I've got those listed on the screen, but I am going to hold off on going into the details of those because at this point in time, I'm going to turn it over to Bill to talk about those and some of our other resources available. Bill?
Okay, thank you, Amy, and thank you, Katie, for putting this webinar together this morning. It's great to be here, and thank you for all your help in helping us get the word out. Next slide, please. So in as much as the PPP and the EIDL has dominated the discussion in the small business world, we're still in business, and we're still in the business of loaning small businesses money through our partners, the traditional lenders, and also through our microloans. Next slide, please. And most of the slides that I have here today are designed primarily as takeaways for you. There's a lot of detail in there and contact information. So I won't go into a lot of detail, recognizing that there are a number of questions already being asked about the PPP forgiveness program, but I thought that they would be good resources for you to have. Next slide, please. And this is some of the eligible uses of funds for our traditional loan programs: start, purchase a small business, renovate facilities, etc. We've got a couple different programs that specifically for each of those, and we're actually pretty competitive on price-wise on a number of programs. And so when you get to the place of expanding, please find us either through your local lender or contacting us directly. Next slide. And this is where I'll talk a little bit more in detail about the SBA Resource Partner Network. This gives you just some idea of the scope and scale of what they do on our guideposts there, and also how widespread it is with our 1,400 partners nationwide. Next slide. These are listed in no particular order, but what I would say is what I've come across is a lot of folks who are working very diligently to continue on in their efforts to have their business survive. Some of the folks out there, we were talking before the webinar actually began, some businesses are actually thriving now, like the outdoor recreation, plexiglass, the glass installers, things like that. But what we've also found is a lot of folks are actually pretty exhausted. And one of the things that happens in circumstances like that is people sometimes forget to ask for help. And so what my primary purpose here is to encourage you to reach out to our free and confidential resources for the help that you need. And as Amy mentioned, the main SBDC has a number of tutorials, etc., on the PPP forgiveness program, but they also can help you pivot, redirect, do turnarounds, etc. So there's a wide portfolio of services that all of our resource partners provide, and the key is to you don't even have to pick up the phone. The numbers are listed there, but it's made all of the capacity pretty much is still virtual. So if you go to the main sbdc.org website, you can just click the icon that request advising, and you'll get connected right away. So I would encourage you to use at least try a couple, because running your own small business is a very personal thing. I had my own business for a long time and discovered that there were some folks that I thought I worked better with than others. All of our providers are excellent. It's just you're going to find that you're most comfortable working with one. So we encourage you to reach out to more than one to see who it is that is the best fit for you. And one of the options is the main SBDC. Next slide. Another option is SCORE. These are mentors for America's small business. And many of these folks actually held senior executive positions in major corporations, or had very specific positions that allow them to have a skill set that's very deep in things like transportation or logistics or hotel management, reservations, things like that. And they're also very good at general advising. And score.main, score.org, and you'll get plugged right in. Next slide, please. The Women's Business Center is another one of our resource partners that provides management and technical assistance counseling to both men and women, but it is staffed specifically by women. So some folks are more comfortable with having a woman business counselor. If you want to be assured of getting a woman business counselor, try the WBC. The other resource partners are pretty evenly split, but the Women's Business Center is fully staffed by ladies. Next slide. If you are a veteran, we have additional programs available for veterans. That we work in conjunction with the Veteran Business Outreach Center and have regular training programs that are designed by and specifically for our veteran population. And you can reach out to the Veteran Business Outreach Center or our district office. There are 3 of us in Maine who work with as veterans liaisons. Next slide. And this is how to get in touch with us, SBA.gov/ME. And also our website is actually quite good now, and there are a number of trainings that can be very helpful to you as you are pivoting, growing, expanding, that are listed at the bottom of that slide. Next page, please. And that covers all of what the traditional programs. I see that we have what looks to be, I think, 6 or 7 questions in the queue. So if we could open it up for questions, that would be great.
Perfect. Thank you, Bill and Amy, for covering all of that. So we'll jump into questions. With the possibility of a new PPP package in the HEALS Act, what is the SBA's suggestion for PPP forgiveness applications, given that the HEALS Act would make the forgiveness process much easier and smoother?
Yeah, as I mentioned, I wish we had a crystal ball, and we are staying tuned on this as well. We see the same thing. There's a lot of talk about sort of some blanket forgiveness, particularly of loans of $150,000 and under. As I mentioned, our average loan size was $80,000, so that could be a lot of loans in Maine that could be it could be very much streamlined. That, I think, is why some lenders and some borrowers are sort of on pause right now and not rushing to submit forgiveness. But again, I don't have a crystal ball. I'm not exactly sure where that's going to go.
Okay. Next question is, our employees have been working 30 hours instead of our usual 40 since getting the PPP loan. Does this work with the 25% reduction since this also lowers our FTE?
So I would say 2 things. First of all, there's 2 tests. There's the wages and then there's the FTE test. If there's a way to account for the wages, you could certainly think about doing that so that you meet that criteria of not reducing them by 25%. And as far as, it sounds like you have the same number of people, so that wouldn't be a factor there. But I would say definitely check out the safe harbors, because why are they only working 30 hours versus 40? Is it because of one of these federal mandates or state mandates or something like that? So there certainly may be a safe harbor that could benefit you in that regard.
If you were paying the heating oil prior to February 15th, stopped for the summer, but needed to pay for more heat by the end of the 24-week covered period, would that count?
So it was a utility cost to you back during your reference period. And regardless, there isn't, with the utilities, it doesn't have to be the same amount. So if your electric bill in your reference period was one amount, but it's going to be higher in the covered period, there isn't that, it doesn't line up like that. So that shouldn't be a problem.
If businesses have paid all of their employees through the end of the covered period, but are forced to lay off employees after the covered period, the application asks them to list 0 as a number of employees at the time of application, even though they kept all their employees through the use of the loan. How does that business ensure they get full forgiveness?
So this is another question that has come up a lot on our national kind of scale. And I know this is something that they're looking at because there are businesses who, again, this hasn't, this is much more prolonged than it had originally been thought. So I would just say, completely present the information. You kept the people on like you're supposed to abide by the rules, and then fill out the forms correctly. But provide that documentation at the time of forgiveness as it says on the forms.
How does a business determine if they should be using the EZ form for forgiveness?
Yeah, I covered that a little bit in the slides, but I think it's really clear if you look at the instructions. Each form, the EZ form and the non-EZ form, the 3508, I guess it is, they have a very detailed set of instructions. And on the EZ, the 3 options to see if you meet the criteria to use the form are really clearly spelled out right there.
Can the owner of the business put in his or her own FTE even though his or her full compensation is not covered?
Correct. Those are 2 separate and distinct things, whether you're an employee and how much you're paid. So you as an owner would count as that employee.
I'm trying to fill out the forgiveness app and it states on the app SBA PPP loan number and then the lender PPP loan number. I have the PPP loan number from the bank, but they are telling me they do not have the SBA PPP loan number. Where do we get this number form from, or is it necessary? That was a lot of PPP.
I know, right? That still doesn't quite roll off the tongue, even after all these months. So somebody at that lending institution has the number. So that when you submit that application for forgiveness, work with your lender. It just may be that person you've spoken to might not have it right there. So they definitely have that information. But if that becomes a bigger issue and you run into any challenge there, reach out to our office and we'll help.
Also, if you are a self-employed or a sole proprietor and do not have a regular paycheck or a specific time in which you pay yourself and use the Schedule C to figure out your wages, what do you put for payroll schedule? Weekly, bi-weekly, should you check off other?
I would certainly say other is going to be applicable there.
Does hiring someone from a temp agency count if they are full-time?
That's an interesting question. So probably shouldn't answer it as I think, but I will say look at how you're paying. You're paying the temp agency, not the employee directly. So I think that's going to be a differentiating factor there. I think what they're looking to see is that you're paying wages to an employee.
Is it acceptable for a lender to ask us as a borrower to sign a PPP loan modification that amends loan repayment terms, including length, maturity date, interest rates, etc.?
So certainly it's within the lender's purview to do loan modifications. I know we work a lot with the lenders to try to help them in this regard, but with the changes in the program, I think many of them felt they needed to make loan modifications now. Technically, there aren't payments due, and hopefully the whole thing gets forgiven. So hopefully all this stuff isn't necessary. But there are certainly going to be times when your lender is going to need you to sign modifications and documents in that regard. But the interest rate on this program is fixed. They can't change that. It is that 1%. And the maturity of the loan, again, if it was the loan originated before June 5th, it's 2 years, but you could request 5 if necessary. You just need to work with your lender on that.
Perfect. Well, I think that is all the questions I had. If anybody else has any questions, one came in. If your loan was accepted before June 5th date, but want to change to the 24-week instead of the 8-week, do you just put the 24-week period on the forgiveness app, or is there anything else you need to do?
Nope, that's all you need to do. You can make that switch yourself, account for it on the application, and abide by those guidelines.
Perfect. So we do have a couple more minutes. If anybody has some last minute questions, feel free to put them in. Like I mentioned in the beginning, we will be sending out this recorded webinar and then also the deck slides to the email address that you registered with. So stay tuned to watch that for that later. I want to say thank you, Amy and Bill, for everything you guys have been doing on behalf of our KV Chamber members. I know the PPP loan has been a godsend to them. A lot of our businesses in the Kennebec Valley area would not be here if it wasn't for that. So thank you you guys have probably been working 24 hours a day getting all these answers done. So thank you so much. One more question just came in. Does a temp agency fee qualify for an expense then?
So that wasn't listed on the non-payroll costs, so that is not going to be able to be included.
Perfect. So please reach out to the chamber or Bill or Amy if you have any other questions after this presentation. Thank you again for everybody for joining us today. Thank you again to Central Maine Power for being our sponsor, and thank you, Amy and Bill, for everything you guys have been doing for our small businesses in Maine. Hope everybody has a great day. Thank you so much. Bye-bye.
Thank you.